Welcome to Commodity Analysis. On October the 1st, 2013, and the US session is well underway, I want to go out and have a general look at US equity markets. I'm going to look at the E-mini S&P. I'm going to look at the E-mini Dow. I'm also going to look at the Euro Stoxx 50. And let's just, here we are. And I want you, again, a lot of people can find advanced linear technical analysis extremely frustrating. There's just too many lines and they can't understand what's going on in the context of those lines. So I've simplified it here. In fact, we need to get rid of that one now. Let's remove that. So where we've got what we've really got here, and we'll get rid of that as well. So let's make it as simple as possible. What a green fork going up. Green fork that we first started to take notice of back in the end of December, January, where we had the big gap up, which we still haven't filled, bang on the lower medium line parallel of this green fork. Then we've got, if you look, this blue fork, which is taken off these three important pivots, here, here, and here, and we drew this at the end of the summer. Then we've drawn a black fork, a downsloping fork, using these three pivots here that I'm indicating. Okay, so let's just have a look what we've got going on. There are no reaction lines included, by the way. I haven't drawn any reaction lines except for the blue fork. Okay, the blue fork has, you can see these thin red lines. These are the reaction lines at 50% and 100% at intervals of 50. So that distance from here to the midpoint of this line is then projected into the fork. 50%, the halfway mark is there, the 100% mark is here. And let's just have a look at what's going on. First of all, let's look at the green fork. And we can see that we've supported price not only back here in Jan, but in summer this year, midsummer. Price, I mean, looks quite clean. If you go out and let's thicken those bars up a bit, it looks quite clean with just the wicks showing through. Again, this was slightly more messy here. And we'll come to that in a minute. And here we are now. So what we've actually got is a series of higher highs, 1, 2, 3, and higher lows, as you can see, right along the bottom of this median line. Okay. Now, if you go down to a lower time frame and look at the reaction lines from this fork, they also work a treat, but we're going to come to that in a minute. I want to now cover the black fork, and this is quite important. This is a downsloping fork that we've drawn, and let's just get rid of it for a moment, because you see this grey fork here. We've drawn that at the end of the summer. And we saw price, and if you look, and the video, this video accompanies an actual PDF file, a text file that will be posted to subscribers, and we realised that price, once it had held on this line, we thought it was going to zigzag along this line, this grey line here. In fact, let's just using e-signal to show you that there you are. We thought it would fall back on, and then we'd get a sort of pattern here and then a breakthrough. Well, that's pretty much what we got, but it went further below the line. In fact, we go down to the 240 minute. What we suggested was this down, up, down, and then a breakout. Basically a wedge using this bottom green line and this downsloping grey line. That didn't happen. So, you know, we didn't break down to the center line. Buyers are clearly in control of this market. And we're going to have a look at what's happened today in a minute. And we closed the gap on the E-mini S&P. So basically, the only thing that the pattern I want to show you here is this upsloping blue fork has provided on 2 occasions resistance. Now, are we set to make a further higher low here and then break out, or are we going to come to a torrent of price action and fall through? We have actually fallen through this reaction line. If we go down to the 60 minute, this is the reaction line. You may say, well, and these are drawn manually. There's no indicator. We did try and get one made to draw automatic reaction lines, but the processing power and the way the code is constructed for custom indicators with e-signal, the actual language, it didn't work out, which is a shame. So these are all inserted by me manually, and you can see there's definitely good price correlation there. Remember, my reaction lines are all what would be called by some people cut-through trend lines. In other words, very rarely do you get price action that actually pings off like this bar here. Have a look at that. I mean, that, you know, shows pretty accurate. This one and that one. You get a mess sometimes, and price is messy, and that's you know, the study of price distribution. But what I want to draw your attention to now is not only are we've rallied very sharply today, but let's just have a look. You can see price action here on that reaction line, and I guess if we would go even lower time frame, which I don't really want to do because I want to move on to the E-mini Dow, we could you know, show a direct correlation with price there, and you can see how this green lower median line has supported price, even though price has put its foot through it. It's like putting your foot through the roof. You're going through the ceiling, but you manage to pull yourself back up, and here it is again, bouncing along that line, which indicates and tells us something about price. So let's just have a look. What I want to show you, and let's get rid of this, and let's try and make it more simple. We've got a fork here, this down-sloping fork that I've drawn, and let's try and show it in all its glory off these pivots here. Okay, the objective 1650, I guess, something like that. Now we'll have to see if this line holds, and we're going to break up again. This is decisive. This area here, the fact that we have made a higher low is extremely important. And we'll have to see over the coming days and next week, the early part of this month, October 2013, how price behaves and whether we challenge and retest the support of this upsloping. I mean, there are other factors involved. There are other lines. There's never just one fork. But this brings me on to a bigger issue I want to show you, and that is, we go into the 240 minute, the bigger fork that can be drawn. Let's go to the daily. Hold on while it loads. And let's just show you this. And let's just swing out. Because we realized that if we draw this fork, and I pointed this out in one of last week's videos, you see the center line, this fork here, let's get rid of this one. This is very important. This is very important. There we go. Let's fatten that up for you. There is, and I've looked at this in quite some detail, some very good price correlation, not only with this upsloping reaction line, but with these bars here, these two. That gives me some indication that we may have a fork in play. Now we'd obviously need to make a break of this line and charge down towards, I mean, that's a long way off considering we're hovering around 1687. But that's a long way off. Let's go and have a look at something else that shows a less encouraging picture. Almost like a triple tops. This is the E-mini Dow. And yes, although we could argue this is a higher high here, and this is just marginally a higher high here, that doesn't look a particularly great chart to me. That looks like a topping out pattern. But again, the difference with this chart is we haven't closed the gap from Sunday. Price hasn't closed the gap. So we guess we may see a challenge on this line here. And we watch all of these equity indices. And let's just have a look. I've left one fork on here. You can see it here. This fork here, which we drew. Beautiful correlation with price on the center line. Then straight through. There is a retouch there in a lower time frame. And now look, support on this is the 100% reaction line, or what would be called by some warning line, the lower first warning line. And I guess if we tighten these pivots up, we could prove that there's a touch on that. But that's an interesting chart, especially in the daily. When I look at it like that, I look at price action, that doesn't look great to me. And it all depends on whether we hold here. And look how tempted price is. Look how close we are, or were actually, I should say. Look how close price was to touching this center line. And look at the reversal today. With such great news coming out about the US You know, I don't quite get it, but there you go. It's misinformation, news, fundamentals, whatever you want to call it. But I don't quite understand how we can get so close to a center line. You know, uh, if we break above this lower median line parallel, then we're heading back up, and we're heading back up fast again, much as we did in the summer with the previous high pivot and the fork drawn off that. In fact, let's show you that very quickly before we go over to MetaTrader. This is simply, quite simply, a good indication of whether price is going higher or lower. Draw straightforward Andrews fork, and there's your Andrews fork that we drew at the end of the summer. Let's fatten it up. There it is in black. Down sloping, nice touches on here. Let's move this slightly, get this slightly bigger. Nice touches we had around here, and we failed. And look how sharply we rose, went straight through, bang, and now we've got a retouch. That's interesting in itself. Now we have a retouch, the wicks poking through the upper median line parallel, and I haven't drawn this particularly in this time frame. You've got to be extremely careful if you're using the line tools on e-signal. So let's go anyway. Let's go over to FX Pro and MetaTrader. I mean, my broker feed is from FX Pro on E-mini S&P. This is the debt contract, and here you can see a lot of reaction lines. It's a far more complicated picture. That's the E-mini S&P, and here's the E-mini Dow, and that's interesting to show you. Here's the big fork. Let's just tighten that up as well. Here's the big upsloping fork using these pivots. And look what happened. On Friday evening, I thought that looked quite encouraging. Support, plus we had two automatically drawn reaction lines underneath, and then we gapped through. And now look at price. Let's go down. That's in the 240 minute. Let's go down and have a look what's going on there. Look at that. That was Friday last, and here we are Tuesday at 117. Look at that. And yet we are close. We are close. Now, this looks like a touch, but that's actually not the lowest low. That is the lowest low. Okay, so that is how close we've come. Now, whether price is under the assumption, and all of these pivots have a relationship with price. Each one of these has a relationship, although the most important in this classic Andrews downsloping fork is the lowest low. And we saw last week, I showed you how these downsloping reaction lines can be accurately used to trade off the combo setups with the median lines and reaction lines. Let's go to the deck E-mini S&P. Here we are, all historic median lines. This is in the 240 minute. Here, it's a classic example. Let me just show you this. That's beautiful. Let's just put a fat. You can see over there how price touches and then goes through. And the next in the set is this one, and let's tighten that up as well. It's a little bit of a sloppy pivot. Straight over on the auto line with a manual trend line. Be interesting to see what happens here on the 240 minute. There's the angle changing as we drop lower. So we may even be touching on that. Let's go down now from the 240. There you go. I suggest to you we have a touch here in the 240 minute. This is the location of this reaction line. If you want to learn about line location, get in touch with me. Read the course details on my site. Look at this upsloping reaction line. Touch on there as well. And don't think these don't work. Every single one of them has some behavior. Look at that beautiful downsloping reaction line. Confluence of two. Look at that behavior. Let's have a look at the I want to show you this. This is the Dow Jones stocks, Euro Stocks 50. We had a big gap filled here. Again, I'm using this blue fork here. We've got an upsloping fork here. This is a combination of historical pitchforks from large time frames. And look at this. This in the daily chart is the location. We've drawn over it. These can't be moved. These cannot be moved. You refresh the chart, they go back to their position. They are in relation to the pivots chosen for the pitchfork they are derived from. So let's go down into the 240 minute, and you can see this touch here. And let's go forward again. You can see it zoom through. There's the reaction line in the 240 minute. That's the location of it. We manually went over it. And now look at this, a breakthrough today. That to me looks quite promising for the upside. How that ties in with the fundamentals, gracious me, you know, goodness only knows. But that certainly doesn't look like a market that's, I mean, that is a classic Andrews fork in the 240 minute, and price firmly looks like it wants to go higher. So let's go back and have a look at the E-mini Dow. Here we are. A miss is as good as a mile. I mean, this is a good indication. You know, stops below here at the classic 15,000 area. I mean, this, you know, psychologically is incredibly important as well. Now we have to draw some forks to find out where we're heading over the next, and this is the first one I draw. This one, and this one. We're going to break this swing up. Okay, we can't use a classic Andrews fork. It's just absurd. Okay, it may well reach this line, and we will draw it at a later point. But to start with, what you'll find is price moves in increments, and this relationship between this pivot, and the most recent pivot, this would be the first objective for us. In this time frame, we can go down and make a smaller fork in the 10, 5, 10, 15 minute. But this would be, for me, the next location for the mini Dow. If it can reach this line, then we'd look for a pullback from there and a breakthrough following that pullback and higher up towards the previous high. So although we're in two minds, last week we were pretty convinced that the bulls were firmly out of the picture and that price looked incredibly weak. Now we're beginning to see, after today's big nice bar, the gaps being closed. There could be some great trading opportunities over the coming days. And here we are again, another great chart showing the next line of resistance on the E-mini S&P. If you'd like to subscribe free to our daily video that's produced pre-market opening, you're more than welcome. Join us again soon and keep drawing the lines. Bye now.